Yeah, hello and welcome to another update video about ADA. On the ADA chart, we are still tracking this C wave to the upside, like circle wave C. I'm not going to talk about the bigger picture in this video. I mean, this is a bullish count, right? What else can I say? I mean, it's a bullish count. It's been bullish, as I said, as long as we're holding 51 cents. That was the communication over recent months, that the 51-cent level for me is the pivot between bullish and bearish momentum overall in this larger degree structure that I show you every few days on the daily time frame, right? As long as we're holding that, the idea of a triangle pattern, which is a bullish count, is still valid, okay? Now, within the triangle, though, we are tracking corrective movements. So after the market bottomed in the C wave of the triangle in April, around the 7th of April, we were tracking a three-wave move up in circle wave A. At the time it reached target. We then were watching for a B-wave pullback, which also reached, you could say, target, at least the support area. They are not really targets, they are support levels. So once we have a local top, we normally watch these levels to see if there's a reaction, and as long as support holds, the roadmap can continue to be followed. So support held here, 38.2 retracement was tested for a couple of days, and then the C wave to the upside started. So that's been the communications kind of since last week, that we were watching for the start of circle wave C to the upside, and that target area is still unchanged. Now, people always ask me, can you show how these FIB extensions are calculated? I want to take the opportunity, take a moment to show you that. So what we do is when we track an ABC structure like that, which if it's an ABC structure or something different, I mean, we get that information from the context. So if the initial move up is a three-wave move, then we can't be clearly bullish, but the context tells us it could just be the A wave of a D wave. And D waves are three-wave movements. So what we then do, we're adding support, and once we have a low in wave B, we can track the C wave target. How do we do that? We know that a C wave often has the same length as the A wave. So we take the Fibonacci extension tool, we measure the distance of the A wave, and then we compare that with the distance of the C wave. So, and then there is typically a standard Fibonacci extension zone between the 100% and the 161.8 extension for a C wave. Now, normally they don't necessarily stretch to the 161.8, it's just a level to watch, but I would normally use the 100% extension as a first ideal target. So 78 cents is the first ideal target. And we're still on our way to getting there ideally, right? Now, the C wave would also be a 5-wave move. I can only see 3 waves up at this point. Would be great to get another 4-5 pattern. I've adjusted micro support, which is based on the length of the third wave, and it's defined between 64 cents and 68. So why is that important? That's important because if we now see any kind of pullback can happen at any point, it's due now, okay? I don't see any sign yet other than a small red candle there, but if that fourth wave starts, I would need to see a reaction in this area. So that's why I've got this support area. I'm calling it weak support because this is really based on the smallest microstructures. And it's quite a small area, so volatility can already lead to a break. But yeah, this is still, to keep focusing on this scenario, we want the market hold above 64.6 cents, essentially. Circle wave C seems to be a so-called ending diagonal pattern with ABC structures in the subwaves. That's okay. And then when we get to sort of that area up here, 77, 78 cents, I think we can watch for a bit of a reaction, because this is where, depending on if we get there with only 3 waves up, I would still watch for another 4-5 pattern and track this micro support area with the price, which will go up with the price like a trailing stop essentially. Yeah. But I've labeled it weak support. Probably later today, tomorrow, I will remove this previous support area. We don't really need it. We don't really need it anymore. And the focus is on micro support as well as the next upside target I communicated already last week in the 78 cent plus range. But please note, we've now reached some structural resistance, which is this previous swing high from early in April, here around 70 cents. That's where we're now. And then that area up there around 78 cents could provide some resistance as well, where that green line is positioned, and also that Fibonacci level. So that's how I'm tracking at the moment. The ADA chart, once that D wave is complete, we'd be watching for an E wave pullback that should ideally form a higher low, similar to here, this corrective pullback, yeah. And then ideally, if everything goes well, this could be our rally to, I don't want to say new all-time highs, but, $1.70 maybe or so. But I shared these targets yesterday on the daily time frame. Feel free to check that video out. It is still up to date. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.